Thanks very much. Anthony, Rushanara, please.
Thank you. I've got a range of different questions. The first one being, and I appreciate you don't want to get drawn into Conservative Party leadership issues, but I have a really important question. Anthony, behave. Tom Tugendhat effectively blamed the bank over quantitative easing. There's been quite a bit of kind of criticism. He says we haven't been controlling our own money supply adequately, and I'm afraid QE has been inflating the sugar high of growth, triggering inflation. You've also had, we've had the earlier exchange with the chair about certain views about Bank of England independence and so on. So I am concerned that there's a sort of culture now building up in these debates about what the bank does. And of course, the bank is not, and what you're doing shouldn't be, I'm not suggesting you shouldn't be criticised, far from it, I'm often a critic. But the question is, does all of this have a corrosive effect on the independence of the bank? And should you be sticking a metaphorical two fingers up at those who not literal, like the Education Minister, at those who are trying to delegitimise the independence of the bank, which is a serious issue in my view.
It's a very serious issue. And all I would say again is I'm not going to join in the debate around, who should be leader of the Conservative Party. That's not for me. But it is, of course, a very serious issue, and I hope that people understand, the importance of central bank independence. And the fact that, as I've said a number of times before, this is the point in time, given the stress that we're experiencing, that the independence has to, and the bank has to do its job, and we are doing our job. As a general matter, because it's obviously a point that gets made, I'm afraid I don't subscribe to the view that QE is responsible. If that were the case, I think we would have a much stronger domestic demand in this country than we have. But I'm not going to join in that debate. I'm simply going to say people need to understand the importance of central bank independence as a cornerstone of economic policy, and it's not just in this country, it's of course now in many countries around the world.
Are you concerned that in this contest, leaving aside are you concerned that the central bank could become a political football in the pursuit of individual ambitions by leadership candidates who want to be Prime Minister? And is that acceptable?
Well, look, I'm afraid I'm not going to join in the debate. All I can say is, I think, there's an election going on. People must, express their views, and no doubt the electorate will determine what they want to
Some might
achieve.
argue that you're not forceful enough in defending the independence of the bank. Some might argue that you're being too soft on people who think the bank is fair game and its independence is fair game. And we've seen attacks on our institutions by the I don't know what to call him now, the outgoing Prime Minister. And isn't it the case that this latest round of some candidates making remarks about the bank, QE or independence, could involve the bank losing legitimacy, and that this could be an attack on yet another of our institutions? And shouldn't you be standing up to people who do that? Perhaps some of your predecessors might be more robust in doing that.
I'm not going to join in the election of the leader of the Conservative Party. I'll just say this: I think Parliament is an important bulwark in terms of institutions in this country, public institutions, that is. And I very much value the role. Well, no, can I just say I very much value the role this committee plays. Yeah, we're accountable to you. You're an important part of the overall structure of the institution.
Well, I think I'm inviting you to speak out for the independence even more robustly and without fear or favour against those politicians who try to compromise your independence. So moving on to another question, which is Sir John Cunliffe said in a recent interview that the bank was prepared to do whatever is necessary to bring inflation down to the 2% target. But obviously you've got quite limited room for manoeuvre given the cost of living crisis, given the other pressures that it's been well rehearsed. How rapidly, we've had a 5 times increase, in interest rate since December, how rapidly, just picking up on the earlier points about interest rates, should we expect interest rates to go up to what? How many houses should we expect to be repossessed? What should be, you mentioned mortgage holidays, what should be the way to protect Before anyone says that there's straying into policy, I suppose I'm looking to the financial crisis and some of the actions that were taken to prevent mass repossessions. In the event that your main tool is going to be interest rate rises as part of the whatever is necessary mantra to bring inflation down to target, it would be helpful to understand what period we're looking at, where we're expecting interest rates to get to, and what mitigation will be taken. But earlier on, Ms. Breeden talked about 40% of people on fixed rates that are going to be affected in order to mitigate against people ending up at risk of losing their homes. What can our constituents expect on that front?
Well, let me say the most important thing of all, which is the most important thing is and John Cunliffe was exactly right in what he said, that we will bring inflation down to target, because if we don't do that, things will be worse. Yep. That is, I'm afraid.
So in that spirit, and I'm very, that's very welcome. What's the time frame for bringing it on target, and what are we expecting? What should we expect in terms of rises in interest rates?
We're literally about to start work on the August inflation report forecast next week, so we haven't started work on that. The May report had a profile which brings inflation back down to target over the course of just over 2 years. It actually has a very steep downward slope in the course of next year, and that is something that I'm always going to forecast with an open mind, and that's critical. But I think the basic fundamentals of that profile remain in place today. I think we've seen a certain amount of news since May, and we will have to sort of crunch that through the whole thing. And we've, by the way, got some very important data releases that we haven't yet had that we will have by the time we complete the August report and we take our policy decision. And as I've said, and I said a couple of weeks ago, the important thing about the June meeting was not just that we obviously did, as you said, we did our 5th interest rate rise, but we also changed the language that we used around the looking forwards. And I've been very clear that that means that there is a range of things that are on the table when we get to the meeting at the end of this month. And that's the right way to view it. It's my view that we should not, in advance, commit to what we're going to do, because we've got a lot of work to do on a forecast, and then as a committee we have to sit down and put all that evidence together and see what we come out with, and that is what we will do.
But you will appreciate how people watching this are going to feel, and I'm sure people around this room feel that way. People will need to make some plans around how to manage their finances, because we've already got skyrocketing food and fuel prices. Then if you're looking at the 40% that are going to come out of fixed rates, where they're going to have to pay a lot more in their mortgage increases, waiting for the analysis to happen without any sense of where they're likely to end up is not satisfactory. So what can we do to ensure that they are prepared? And what can you learn from the financial crisis, if anything? If there are any lessons, of course, because I appreciate it's a different context, to prevent repossessions. And how many repossessions are we looking at?
Well, let me take that in two parts. Come back to repossessions. I'll repeat something I know I've said before in hearings. The situation that we're in the UK is that there is a very big external shock hitting the UK, which is a real income shock caused by increases in the prices of things we import, particularly energy and food to a degree as well. Every time we take an interest rate decision, we have to reassess just how big the impact of that shock is going to be in terms of domestic demand and in terms of bringing down inflation in and of itself. Because as I said before, we're in a trade-off situation now in terms of the impact. Yeah. It's quite different to the US, by the way, in that sense. Now...
But Chancellor, apologies, I've done this before.
No.
Governor, we're looking for answers. I mean, the analysis, and there's a lot of analysis already, the country is looking to you for pointers in the direction of travel on some of this. And, on the one hand, what's the time frame for bringing down inflation back to target? Is it a year? Is it 2 years? We need some clarity.
Let me go back to what I said earlier. No, hang on. Let me go back to what I said earlier about the profile we've had, and which I think still remains in place. Other things equal, we expect, sadly, that there will be a further increase in inflation. I'll come back to that, but that during the course of next year, our best judgment is that there will be quite a steep downward slope on inflation, and it will come back to target in somewhere just beyond the 2-year point.
Okay.
Now, what is going to make other things not equal?
Yeah.
The risks, as we said in the May report, are on the upside. Well, there are two things I would point to. One is domestic, the other is international. The international thing is, frankly, Russia and Ukraine. It's increasingly, and if you can see this in the May inflation numbers. Increasingly, the pressure is coming from one source. I'll give you an example. I was looking at this before I came over. Since the May inflation report, the May monetary policy report, most commodity prices have actually declined because there is now, a much more pessimistic outlook for the world economy, with one exception: gas in Europe, which is substantially for this winter's price is substantially up. So we have to balance those. We'll have to balance those things.
No, I appreciate that, but it's very helpful to have some idea of what.
Well, I think we'll still have the same profile.
Okay.
The second thing is obviously domestic price setting and the domestic labour market. That's the big other thing.
Yeah, and on mortgages, if and you gave it's very helpful to have this sort of up to 2 years potentially, barring the kind of external point about Ukraine. On mortgages, if as we can expect rates to continue to increase, what's going to happen? What's your view on the kind of numbers we're looking at in terms of repossessions?
Go back to what I think Sarah was saying earlier.
Yeah.
So when we look across the whole population, and here I want to make quite clear again, of course, I fully understand there will be people who will be in a much more difficult place than the average of the population. But the market curve, currently the market believes that we're going to go up to around 3% in terms of the bank rate. Now, let's be very clear, I'm not endorsing that.
Sorry, I didn't catch that.
So the financial markets believe that our official interest rate will go up somewhere around 3%. I just want to be very clear, I'm not endorsing that, I'm just using it as a benchmark.
Yeah.
Because as Sarah said earlier, if you look at the measures of sort of historical stress in terms of debt affordability in this country, you can put on about 2% or something. It depends on what you assume on fixed rates.
I've got quite a lot of questions, so I'd be really grateful if we can rattle through this.
So the point is, we've got on the country as a whole, there is headroom in that respect. But I do not want to take away from the fact that, of course, there will be people in very difficult positions. And one of the reasons, going back to points I made earlier, that we want the banking system to maintain its resilience is that they're in a better position to help those people. Okay. That's reassuring. Thank you. Moving on to climate change. In June 2022, the bank published the findings of the Climate Biennial Exploratory Survey. What more should banks do to ensure, and insurers do, to understand them and manage exposure to climate risks, and how will the bank try and ensure that financial institutions manage climate risk appropriately? And I just wanted to, I rather like the summary to the "It's Risk Management Stupid" speech from this morning, Mr. Kashyap. But you made the important point, which is an important rebuttal to those who are questioning the bank's engagement in this agenda and the new remit, the additional remit. So what else should be being done in this territory to ensure that financial institutions manage climate risk appropriately?
Maybe I'll start and then Anil can come in. There are two big takeaways that we had from the climate BES exercise. The first is that banks and insurers need to do much more to improve their risk management of climate-related risks. They didn't have the data that they needed. They hadn't developed the methodologies. They were looking to third parties to help them. And what we said to them, we put out a whole load of good practice, And through our supervision of these firms, we are going to drive through those improvements that are needed, and also share them more broadly, because it's not just the largest banks and insurers, it's every financial institution that needs to do a better job of managing these risks, because it's only if we've seen where they are that we can look to reduce them. The second takeaway...
So just while you're on that, can I want to bring in climate catastrophe, sorry, just to keep it, just to get it, get it. So Sam Woods said that the bank has not tested for a sudden and unanticipated hardening of climate change policy, which was triggered by some sort of event, presumably an environmental catastrophe. Why not in World Bank put in place such a test in the future? And is that linked to data and evidence again?
Exactly. So what we were trying to do in this very first stress test was focus on where we thought the biggest risks would be. So for banks, that was credit risk. For the insurers, it's investment risk and the physical risks on the policies that they've written. What we've seen through even that exercise is there's a lot more to do. So we need to continue to push through those improvements and fill in the gaps, exactly as you said, Rushanara.
Are they being complacent? Because I've heard this sort of answer, not you, I mean the banking sector, this sort of answer for some time, like even before the current governor joined, about there needing to be a lot that needs to be done. Meanwhile, the climate emergency becomes ever more
So I'll say two quick things, and then Anil might want to add. Do not underestimate how hard this is. This is an unprecedented challenge.
Sure, but can I just push you on that? Because the pandemic was an emergency of a scale that we didn't see, and we were able to act very quickly. Some would argue that when it's right in front of you, we can act faster, and there seems to be a real lack of urgency here. So shouldn't you be doing more to push those who are saying that, rather than kind of
what the
excuses?
Financial firms need is data from their real economy customers. It's the businesses and the households that are emitting the carbon that creates the risk. And so it needs to be done in partnership with their customers. And that's where there's an important role for Parliament in legislating for sustainability disclosures. Anil, to ask.
So I gave that speech this morning, and there were a number of bankers and insurance companies in the room, including people that had led the efforts at a few of these organizations. And I was struck by three things. None of them pushed back on the basic premise of my speech, which recounted a lot of the things Sarah said about things that they needed to do better. Second thing was that they recognized that they've got a bunch of work to do. So people kept talking about this is version 1.0. We know it's going to be iterative. We're in this for the long game. And so one concern I thought could arise is that they viewed this as just a hurdle to get over, and now that it's behind them, that's it, it's over. That's not it at all. I mean, there's people in these organizations that are going to be pushing this agenda, and there's actually a fair bit of cooperation amongst them. They are going to do some of this without us even pushing, which is very good. I mean, they've got these industry forums where they're cooperating. They're down in the weeds talking about, well, what did you assume about this and that, and how are we going to do this, which is very, very good to see. So I think, we kind of catalyzed some effort here that I think, you may think they need to go faster. I think what Sarah said about the data is a real problem.
Okay, but I mean, it's quite frustrating, to be honest, because this is the argument that's been made for a long time. Can I just turn you to the president of the ECB, Christine Lagarde, who's twice said that the ECB should consider green-targeted lending schemes to help channel lower interest rates for green activities and reduce exposures to volatile energy sectors, a primary source of monetary instability. The Bank of Japan, the Bank of South Korea and the Bank of China have already implemented such programs, in the network for greening the financial system has already outlined how such green targeted refinancing lines could work. Should the bank be considering how it can green its own targeted refinancing lines? For example, the Green Bank's Term Funding Scheme.
Can I say that the first central bank in the world to apply a green tilt to its corporate bond portfolio was the Bank of England?
Yeah, but I suppose the question is, what do you make of these sorts of suggestions? What's your view on that?
I don't want to. Well, let me put this carefully. I'm very pleased. We talk to other central banks a lot, but to be honest with you, we were the first one to do it.
Yeah, but that's not the question. I mean, obviously it's welcome, and your predecessor, was very enthusiastic about this agenda, but we can't rest on our laurels because we've got a climate emergency. Some countries, and actually in a way the Ebola crisis and then the pandemic is a good example of where things happen over there in other places, and then they come and catch up with wealthier countries like ours, pandemic, for instance. And we can see some of the signs of the climate emergency in certain countries in the south, whether it's drought or flooding and so on, where whole economies are finding themselves already in trouble. So there is a real lack of urgency here. So while we've done well and we've been leading the way, there's no question of that. I just want to know what next.
Well, I mean, Sarah...
What you think of this particular
Sarah leads our work on this, and we are heavily involved internationally and engaged. In fact, I would say we're leaders internationally. In fact, you're a leader internationally. And we're very committed to this, and I rebut the people who say that this is some sort of dilettante thing that we do, because...
Sorry, could you say that again?
I'd say we are leaders in this. Sarah is a world leader on this, there's no question about that. I rebut people who say that this is some sort of dilettante activity that's not core to us, for the reason that you give. It's actually affecting our core responsibility as of today, and that's why we're engaged with it, and that's why we're prepared to put a lot of effort in internationally as well. I mean,
so what do you make of this point about the bank, how it can green its own targeted refinancing lines?
But I mean, can I give you an example from our speech? One of the things I pointed out is one of the things the insurers said in the CBES is they have this same objective to try to meet their climate objectives. They want to have that in their assets that they're holding. They want these things to be sustainable. They pointed out lots of companies to whom they would have to invest in. There's no such thing as an ESG score. An ESG score is an incomplete thing. It's not just climate. That when you take the ratings that do exist, they're heterogeneous across things. So to say we want to green a portfolio is easier said than done. And finally, one of the things we found in the CBES is that they all say they want to do that, and then you look up and you say, is there enough green stuff to buy? And the answer may be no, and you might need to support the brown sector transitioning to be more green in the interim. So I think there's speed limits on how fast you can go on all of this. It's important.
It would be useful to know how much, if any, the bank is offering in terms of cheap funding to banks to lend for dirty activities, at least, so that we can understand. What the sort of.
Well, we don't currently.
We're not doing that.
We're not currently funding banks, so we've got nothing to tilt, as it were. What we are doing. Can I come back to what we are? And a very important thing we're doing this year, internationally, is the International Sustainable Standards Board, which is leading the way internationally to come up with disclosure framework within the sort of accountancy world. And this is critical because unless we get consistency in these disclosure standards, it's to Anil's point. You can't compare things properly. And so we put a lot of emphasis behind that. I chair the Global Financial Stability Board's Supervision and Risk and Regulation Committee. We are heavily committed to make this work, and it is going well at the moment. I mean, it's going very well. Sarah's also heavily involved in all this work, so we're putting effort in on this.
Okay, thank you. One last question on the financial, on a different matter. The Financial Stability Report notes that there's been a decline in the demand for risky assets. What are the implications of this on financial stability and also on investment? Would it hamper investment in innovation?
Well, I'd start off. I think I view this in two ways. One, I mean, it's unsurprising in a way that as the as I was describing right at the beginning, the risk position in financial market changes, that you'll get a different supply-demand balance for risky assets. What worries us is this thing that we call the non-bank financial institutions issue, which, in other words, when there is a stress, we've got a part of the non-bank world that pro-cyclically is trying to put its assets into the market. And that was part of the story in the dash, was a big part of the story in the dash for cash. And caused clear dislocation and disorder in financial markets. Now, yeah, we think, and again, it's a very important global issue in the Financial Stability Board, that we need stronger international standards to say there's got to be stronger regulation in the non-bank world to prevent that happening in the way it is. Because the idea that central banks will always come in and just buy this stuff is not going to, we can't go on in that world. So that is a very important part about this point about pro-cyclical demand for risky assets.
If I could just add something, I think in and of itself, a decline in wanting to invest in risky assets isn't necessarily a bad thing at this stage, given where we saw risk premium. And there's a great chart in the Financial Stability Report that shows just how compressed they were. And now, in a lot of places, they're back to where we might feel more comfortable because they're around historical averages. And so when you take risk and the pricing is there that's right, it's better. I think the issue that the governor raised about as assets move around, and especially in the non-bank financial intermediation, it can cause stresses. And certainly what we want to see is this adjustment be done in an orderly way so that financial institutions and markets can still fund good investment projects. But at the end of the day, the investment is going to be also dictated by how what the returns on those investments businesses expect to get. And so in an uncertain environment with respect to the macroeconomic outlook, it's going to be a really important factor in any of those decisions, as are the supply constraints that they're seeing. If they want to buy a new machine, it could take a year to get it. So, these are other factors that are also pretty important for the investment decision.
Well, thank you.